Usually, elections are a big part of it. One of the reasons, and I probably should have mentioned this in the opening, is I'm a political junkie. So what's nice for me about emerging markets is it combines both, the financial services business with a lot of politics, because you have to stay on top of what's going on with elections. That's where you get some real dislocations. I'll use Argentina as an example. Right now Argentina is being run fairly poorly, and the asset prices are pretty cheap. Now they've rebounded recently because there's been some negative election results for the ruling coalition. If they're gone, I think the market still has a lot of room to go. But that's why Argentine assets were cheap, because the country's being run very badly. There seems to be visibility now that may change. The market gets ahead of that pretty quickly, so you have to be somewhat careful. The difficulty is being there before asset prices start to reflect that benefit. But certainly politics is a big part of it. You've also had things like the taper fears in the U.S., where there's been a lot of liquidity globally. Some of our favorite countries were growing quite quickly based on cheap money. Indonesia is a great example. Indonesia is one of the countries that really fits our model as far as the type of country we want to be invested for the long haul. Currently, they're undergoing a little bit of turmoil because rates were cheap, a ton of money was flowing into Indonesia. That money seems to be heading in the opposite direction right now. And we think if that continues, we'll be looking to be, buying some more Indonesian shares.